What's going on, guys? Jacob here from HomePad Lending. Today we're going to go over how to save money on your mortgage insurance. And specifically, I'm going to kind of go into some of the details of what you should be asking your loan officer when it does come time to talk about your monthly mortgage payment. Okay. So first off, there's a lot of confusion around mortgage insurance. It's also known as MI. The biggest thing about mortgage insurance that you need to understand is it doesn't benefit you, the borrower, at all. Okay. It's actually designed to protect the lender in case that you actually default on your loan. Okay, so there's no benefit to you. It's actually not even a tax write-off that you can use at the end of the year to get that money back. So it's really kind of a hindrance, which is why your standard is you want to put down 20%. But obviously, there's not a lot of cases, and with first-time home buyers, not everybody has 20% to use to purchase a home. So for the sake of this video, I'll kind of keep it short and sweet and just go over some of the details. So mortgage insurance, first off, is going to be added to your loan right when you purchase it if you put down less than 20%. Now, there's a lot of different ways to do it to where you don't have that. Naturally, mortgage insurance is going to fall off around 78% loan to value. All right. You can request it to be dropped off at 80%, but you're going to have to jump through some hoops to be able to get that done. There's a lot of different things out there in the mortgage industry that you need to be aware of, but not everybody's aware of the fact that when you go to get a mortgage insurance premium on your actual loan, the way that it's done by about 99% of lenders in the market space today is they'll take your current home loan, and when it's just about to be finished, they're going to order what's called a mortgage insurance certificate for your specific home loan. All right. So they're just going to have one specific certificate that covers your loan. Okay. So what 1% of those lenders do, and like I said, that's a really niche market there, but 1% is going to do what's called bulk price MI. So to kind of walk you through that, I'll have some examples here on the screen to show you what the differences are when you do a single certificate versus the savings that you're going to get when the lender does a bulk priced MI or mortgage insurance. What they do is they basically go at the end of the month, they collect all of the mortgages or the mortgage insurance policies that they've done over the course of the month for the purchases they've done. And then what they do is they order one large policy to cover all of those. Okay. So it's like the same thing like when you go and shop at Costco. All right. You're getting a lot more, but you're also getting it at a discounted price rather than buying that elsewhere. Okay. So they're applying that specific mortgage insurance policy to your specific loan at a bulk price. So I've seen it vary. Typically, you're probably going to see it when a lender does this vary at about, the average is about 20%, but I've seen it go as high as 30%. Now, what does that even mean for you monthly as a consumer? That means you're probably going to save anywhere from $50 to $100. It really depends because mortgage insurance premiums are based off risk analysis. And this is a pretty complex subject we can go into some later videos on. But overall, I want you to understand the simple terms of mortgage insurance doesn't benefit you at all as a consumer. Okay. It's to protect the lender from you just in case you default on your loan. So first off, you need to make sure that you're talking to a loan officer that's going to be aware of whether or not they do bulk priced MI at whatever lender you're going with. Okay. Second of all is you need to make sure that that actual loan officer is going to be knowledgeable. Okay. Make sure that when you're talking to that loan officer, they're knowledgeable of the market space and they know that you're going to have the best deal possible or what your hindsight best goal is in mind as far as monthly payment. Okay. Because $100 at the end of the day, a month off of your mortgage payment is going to save you $1,200 annually, right? $1,200 annually is a car payment for a Porsche Taycan. Are you talking to somebody who's knowledgeable and is going to get you the best deal? And are they walking you through the whole process during the actual home loan process to actually benefit you as the consumer so you understand what you're paying to monthly and not just saying, hey, yeah, everything's cool. This is what your closing costs are. And then you're kind of left flying in the dark. So whether it's your first home, whether it's your 20th home, you're going to want to ask your loan officer and shop it around and say, hey, look, I'm looking for mortgage insurance that's going to be bulk priced rather than a single loan certificate or mortgage insurance certificate. Okay. If they don't know what you're talking about, then either get a new loan officer or come and talk to one of us. All of our home loans that we do here are going to have bulk priced MI. So if you have any questions regarding that, please don't hesitate to reach out. I'll make sure that my contact information is going to be seen in the below. Again, my name is Jacob. I appreciate your time and have a great week.